Boom, we're live. It's Chris Igoe. The Florida housing collapse is upon us, right? I don't know. But what I also don't know is how bad is this video quality? Because on my end, it looks terrible. I'm hoping on the viewer's end, it's focused better than what I'm seeing, or this video is really going to suck. But the information within it will be extremely valuable. So bear with me for a second while we get the tech glitches ironed out, because as soon as I pivot into what the real-time data is, that will be most valuable, and nobody really cares about seeing me anyway. I am not the star of this show. The information is. That being said, we are live today on Facebook. We are live today on YouTube, and there is a tremendous amount that has changed within the hyperlocal markets that I service. And when I talk about Florida housing, please understand that the Florida market is made up and comprised of many, many other markets, right? So when I talk about hyperlocal market, I mean the exact area you want to be in or want to sell in, like down to street detail. The macro picture is much different. It's much wider. It's the entire state of Florida. And so when someone tells you a macro number, or even worse, a national number, while it is instructive, it is completely useless as it relates to what you're looking to do in whatever market that you're in. And the supply and demand of each market will change and vary from market to market. So there is no consistency as it relates to market conditions. There's wildly different market factors that exist depending on where you're shopping and what you're looking for, by price point, by location, on and on, variable by variable. But that being said, today I want to just share a little bit briefly about how the market has changed, the impact that's had on what I see in real time, and how that's influencing people's decisions in real time, but also then go into granular detail as to what's happening in each of the markets that I service. Now, if you're on the west coast of Florida, you're totally screwed. I don't have access, well, not that you're as far as this video is concerned, because I don't have access to that information right now. I am only speaking to the markets in which I have the real-time data for. And by real-time data, I mean real-time data, which is not what you're going to find in most other places. They're going to give you lagging information, which is a month or more old, which is totally useless if you're thinking about buying or selling. What you need is accurate, up-to-date information. And this data is up to and including yesterday. Obviously, I can't tell you in real time what's happening right now. I don't know. And hopefully the technology and the algorithms and the whatever get better, so I know it down to the exact second. And maybe at some point, the tech companies will solve for that problem. In the interim, it's irrelevant. It does not matter. You need to know what's happened up until yesterday to govern how you act today. But if you read about it on in the Wall Street Journal, or whatever other publication it is that you want to, the mass media, just know that information is yesterday's news and completely actionable and useless to you as it relates to what's actually happening now. Now, all right, that being said, let's get into what the numbers are and get this off of me as quickly as possible so that the numbers can speak for themselves. And with that, I'm going to add and share a screen, which is much more important, right? And so let's start with that is not helpful. So I'm going to start with the city level, right? And then go from there. I'm interested in only single family homes. So if you want information about something that is not a single family home, please reach out. I have all that information. I'm happy to share it with you. But this will be, a 4-hour live stream, and ain't nobody got time for that, right? So I'm going by city, and the city is, let's start in Boynton Beach, the city that I live in, right? And again, keep in mind what is happening. Some information you entered is missing or valid. I don't think so. Show the chart. Let's go. Okay. All right. Let me just check to see that you can see. Yes, I do. All right. That's good. That being said, if you are commenting, I should see it in real time. I hope. So if you have questions or there's any comments you want to make, please do. Certainly, if you're watching this and you like and subscribe, that helps me out tremendously with the algorithm. So if you haven't subscribed already to the YouTube channel, which most viewers haven't, I think it's something like 80% of the people who watch aren't actually subscribers. Please do me the favor. It helps me out a lot. And then it will provide further what's the word, reach in terms of the information, which is really what I'm looking to do, because I want to help as many people as humanly possible if they're thinking about doing anything in Florida. And if you're not in Florida, that's okay too, because I know, like, and trust lots of other all-star agents that see the market the same way I do and absolutely know how to negotiate and advocate for you the right way, whether you're thinking about buying or selling. All right. So that being said, we're looking at, what did I do? Okay, we're looking at Boynton Beach, right? This is a macro number, right? This is all of Boynton Beach single family homes. But that data, for a second got me confused here. What you can see, and I'm not confused anymore because I'm looking at the current versus previous month. It's showing me January versus December, 26 versus 25. Not really that important, although also, well, it's not that important in that it's not current, but the trend is definitely not your friend if you're looking at the percentage decrease, which is massive as it relates for sold and pended properties. But what you do see is an uptick of 8% in terms of homes for sale. Well, the light green and the dark green bar graph demonstrate the difference between supply and what's closed, which I call demand, right? And you can follow the trend line along, and it is what it is. But what I'm more interested in is the current versus previous month to date. So today is March 1st. What we don't have is March 1st data. What we do have to compare and contrast is all of February versus all of January. And what do we notice? The change in the delta between the percentage gains or losses. But homes for sale downticked almost 3%, sold upticked almost 11, pended upticked almost 20%, right? Good news, depending on what side of the market you're on. And the market is always good for someone. So whether you're buying, selling, investing, if you're a real estate professional, there's no such thing as a bad market. It's always good for someone. You just need to know whom to pivot to so that you still get a paycheck. And as far as paychecks are concerned, mine sucked from YouTube last year. And the reason for that is, well, there's lots of reasons. Mainly, the market had changed dynamically. And also, people just simply were not trading into or out of or relocating at the same velocity they used to, right? So I'll put my personal issues to the side because they're irrelevant. But the reality is, I did not get many phone calls or many reach outs from YouTube last year from people who had seen my content, know me, like me, trust me, and then wanted to hire me to help them buy or sell a home. Simply didn't come from YouTube last year. Or if they did, it was so insignificant that it's irrelevant for me to talk about. What I can say is starting in January, ballpark figure, the volume of reach outs that I've received from people who are hiring me to help them find their dream home and dream lifestyle, max out South Florida living to the fullest, is at its highest. And so now the pipeline, which was dead, is not dead. It's grown exponentially and continues to, up to and including yesterday, where I got a phone call from someone looking to buy new construction in Vero Beach, and they know exactly what they want. But the reason that they're ready to buy right now new construction versus buying residential resale is because the incentives are so great when using the builder. And the builder's incentives are so great because their debt service on their balance sheet is completely out of control. They are hemorrhaging cash. So in order to incentivize the buyers, in order to get the balance sheet cleaned up and get the debt service off of their back and into the consumer's hands, they're willing to incentivize you with mortgage interest rates that are much more attractive than they would be if you went to a lender, period. And it's not like they're doing this out of the goodness of their hearts. They're doing this because they have a financial interest and a business interest in doing so. And so Florida is very different than other states, right? With the political climate in other states, there is a lot of people who couldn't move on a dime, but now have had enough time in order to plan, prepare, strategize how to move their businesses and their families the right way in order to get out of wherever it is they're in. And namely, that's California, New York, and Virginia. That is by far the most people that I'm getting these calls from that are hiring me. But it's other places too, right? So I just named the top three. It's not like it's not everywhere. It's coming from everywhere. But a lot of this is predictable. A lot of this isn't surprising. So California and New York are not surprising. Virginia to me was a surprise, but doesn't matter. The reality is our markets in Florida, I believe, specifically Southeast Palm Beach County and also parts of Broward, are more insulated than other markets. Doesn't mean if there is a black swan event that does happen, well, then everybody's going to feel that pain. I just believe our market is one of the most protected from those changes. But make no mistake, if the stock market goes to zero tomorrow, again, impossible. But if it were to be cut in half, or there is some type of systemic break and failure and run on the banks or whatever it might be, if there is a black swan event, well, you can predict pretty accurately that the real estate market is not going to react instantly. The stock market will. You'll know about it instantly. It prices and change immediately, period. And that's why it's critical to understand that it's going to take about 6 years, ballpark figure, for the real estate market to fully absorb the impact of what's happened in real time. It is a lagging indicator. So just know if and when that happens, that's the timeline you can expect. But I don't see that happening anytime soon, especially with the way things are going right now. But actually, before I get into all of that, with what we just had happen over in Iran, I'm praying for our service people, the men and women whose lives are at risk, who are in harm's way, and I'm thinking about them. And God bless America, right? I'm not going to get political at all. I've learned that talking about politics is not smart, but the future looks bright. And now let's get back into Boynton Beach, right? So this is the macro number of where we're at in terms of for sale, sold, and pending. But let's look at month's supply of inventory. Because month's supply of inventory demonstrate whether we're in a buyer or seller's market. Well, if we look at January versus December, the month's supply of inventory skyrocketed 56%, 57%. But still not an extreme buyer's market, but definitely a lot more friendly to buyers who now have leverage to negotiate much deeper discounts than they ever did. The reason this market is so distorted, and so is every other market that I'm going to talk about, is because sellers have an opinion of value that is completely out of line with reality. And the real estate agents, and I didn't use professionals on purpose, because a real estate professional is not going to allow themselves or yourself overprice a house. It is simply not going to sell. Period. End of story. And if you want to overprice your home, then please take my advice. Don't go small, go huge. Go astronomically huge. So don't overprice by 100,000 or $500,000 or $1 million. Why not just do 10 million, 20 million, 50 million, or $1 billion? Because all of them have the same likelihood of selling, which is 0%. But it's fun to play the let's play a lot, winning the lottery game. It's fun to be in fantasy land. My job is to keep you out of fantasy land and in reality. That being said, back to reality. Month supply of inventory, as you see, 5 versus 3.2 months. And now it's down ticked a little bit, which negligible. It's now 5 months versus 5.2, down 4%. Whoop-de-doo. That's what it is. But again, this is Boynton Beach overall, the macro number. What I'm more interested, specifically for my own selfish purposes, is I want to know what's going on in the canyons, right? And the zip code that I'm going to share is not exclusively the canyons. It's primarily the canyons, but there are some 55 plus active adult luxury communities built by GL that are very similar to the canyons. So it doesn't distort the market as much as the macro picture would. But to be just totally transparent, this is not only just the canyons, it's the zip code of 33473, which I'm about to share. And if you're in the canyons, then this is very valuable information to you. And if you're not, then just please hold, because I'm going to share whatever you want next. All right, so what do we see? You know what? I screwed up. I didn't go into average price versus sold price. We can go back to it, but let's start with month supply of inventory within the canyon trails, within the canyon enclave and surrounding markets in the zip code of 33473. Again, if you want more detail, reach out. I can give it to you, but for the that's going to take a bunch of other things that I don't feel like doing right now, and I'm happy to do it if you want me to. But that being said, month supply of inventory, January versus December, up 9%, 2.4 months versus 2.2. And currently, February versus January, 3.9 months versus 2.8, an uptick of damn near 39%. Well, that's not great in terms of if you're thinking about selling, because there's a lot more competition. There's a lot more inventory. The good news is most of it is completely overpriced and never should have been priced that way and has no chance of selling, but definitely distorts the market from the consumer perspective, right? But that's what it is, 3.9 months. And I'm working backwards in no particular order. Average price versus sold price. So this gives you detail in terms of seller's expectations versus buyer's reality, because your house is only worth what a ready, willing, and able buyer will pay right now, period. And if you don't have a ready, willing, and able buyer based on whatever your price is, then that tells you that the market no likey your price. And you better start to get reality based, or you got 0% chance of selling. So if you're thinking about selling because you want to hit the lottery, don't waste your time. If you must sell and you must get the most money possible, then you must create a market within a market by pricing your home the right way, which will virtually guarantee that you get multiple offers, which bid the price higher, which will inevitably lead to finding the one buyer on planet Earth willing to pay more than anybody else, irrespective of market conditions. And proof of concept on that, I just sold a home in Canyon Trails, which was on the market with a good agent for over a year. And it sat unsold for over a year. And prior to them listing with this other person, I told them flat out exactly what was going to happen over the next year with accurate and very predictable detail. And they had to go through getting their teeth kicked in by the market in order to listen to me and hear me and trust me, which was unfortunate for them. And also unfortunate for the agent who spent time and money marketing the property. But when I did it my way, the right way, we got multiple offers, which got them more money than they ever thought possible. And we sold the house in 6 days versus a year. Now, separate to that, because now I have leverage, when those buyers came back to negotiate around the inspection, which I expect everyone to do who's a professional. Of course, they're going to take another shot at goal as far as price is concerned. I expect that to happen. If they didn't, I wouldn't respect the person. But they were great, right? And they did what was predictable. They tried to negotiate a further discount. What they didn't fully appreciate is I had 3 backups ready to go at higher prices than theirs, but they had home sales contingencies. And the sellers did not want to take on the risk of the of the home sale contingency, which I fully appreciate, understand, and respect. But by the time that they did this inspection period and tried to negotiate, those contracts were past all of the contingency periods. And so there is, I don't want to say there's no risk. Again, people can cancel contracts and take a hit if a financial black swan event happens. But most people don't, and it's very unlikely. So these other contracts are just as good, in my opinion, as gold. And we've got 3 of them. So when they came back and asked for a massive discount, told them, please send the cancellation immediately because I got 3 others that I'm about to take. And what happened? Because I had leverage, they got no discount, period. End of story. And so it is what it is. But if you're not working with someone who understands how to do those things, then you're really just wasting your own time. And more importantly, you're wasting the money or the equity or the upside that you could get, that you will get if you do it the right way. But that being said, here's where we're at in terms of pricing in the zip code of 33473. What you'll notice in January and December of 2025, the average active price, meaning it's active on the market, is up 11.2% at 1.33 versus 1.196, right? But the average sold price is different. Also on the uptick 22%, but the average sold price in January was $1,064,000. And the delta between 1.33 and 1.064 is significant. And a lot of that has to do with what I just talked about, overpriced listings. But that's January and December. I'm not going to waste any more time with it. The average active price in February versus January is 1,322 versus 1,314. Okay, that tells you a little bit about the psychology of the seller. And again, there are various price points within this market. So I know this is not 100% accurate, but it's instructive. And if you need more detail, reach out because I'll give it to you. But nonetheless, the sellers think their home is worth 1.322 in February, and the buyers think it's worth 919. So the average sold price versus the average active price, there's a huge difference. And that is the distortion in the market that I'm talking about that most people don't truly understand, right? But if we compare that to average active price for January, you can see the differences. 0.6% uptick and a drop of almost 14% in terms of average sold price. Well, that tells you there's a lot of fat on the lamb if you're looking to negotiate a discount, assuming you have a seller that is reality-based and must sell. And not all of them are. This is an affluent market. Lots of people have different financial circumstances than other markets. And so if they don't need to sell or they don't need to move, or this is just a whim, or they're testing the market, whatever it might be, well, then there's no deal happening because ain't nobody overpaying on my watch. And that's what it is. So that gives you a picture. But what I didn't do is talk about the for sale, sold, and pended. So you can see based on the small sample size that I'm obviously not talking about big macro numbers. I'm talking about a market in which there's only 47 homes for sale in February and 12 sold and 13 are pended. Both of those figures, sold and pended, are down significantly, period. There's no way to sugarcoat that. And the same numbers hold true. That trend is not your friend, depending on which side of the market you're on. But what you can see is that January versus December, that trend is still in place and it's worsening. So is the Florida market collapsing? No. Is the distortion in the market between reality and expectations, is that collapsing? It can't happen soon enough as far as I'm concerned. But that's where we're in as it relates to the Canyons Enclave and surrounding areas. But if you're thinking about buying or selling within the Canyons, please reach out because nobody knows this market better than I do. Nobody knows how to create leverage better than I do. And also, if you're in the Canyons or you know anyone that's thinking about selling within the canyons, please know for certain, hand to God, whatever, I don't know what I'm swearing on a stack of Bibles. I've got a buyer right now that is looking for a particular product. They need at least a 4-bedroom home with an office, or a 5-bedroom home, or any combination more than that. But they're looking for a high volume ceiling model, right? And they don't care which canyons it's in. They just want high volume ceilings and lots of glass and lots of big open brightness. I get it. And so their price point is 1.3 to 1.5. There's probably some wiggle room depending on the condition of the property and the amount of land that the property has. I know there are estate sections within the canyons in each of the GL communities that feature more land. So it's likely in the estate section. But if you know anyone thinking about selling that might have that type of product or type of home, please reach out, because I got your buyer and they're ready to move yesterday. Also, a great family relocating from New York. This is exactly who you would want to have as neighbors. I think they got a 2-year-old, but perfect family to move in the canyons. All right, that's 33473. We're going to go more. Let me just check to see if there's all kinds of comments that I missed. What's up, Josh Bryan? Is this in your MLS, your different software? Different software completely. It's Trend Graphics, and I think there's probably a link to it in the description somewhere. And yes, there is some sort of referral, or what is it? What's the word I'm looking for? I don't know. They pay me something if you sign up. But this is the best pack. There are other packages. This is one of the best ones that I like to use because of its accuracy and its timing. Chris, you disappeared for a while on YouTube. Perhaps that's also why your traffic slowed down. Yeah, Paul, 100%. Yeah, I was not focused on YouTube last year the same way I am this year. Also, I wasn't focused on social media at all for the last year. I was doing something else, focused on something else, and built a massive pipeline in a different industry, which proved proof of concept, which was not surprising to me. But I just found success elsewhere for a time period. But I also knew that as I got more consistent with content, that the deal flow was just an inevitable byproduct of what happens. And that's what happened. All right. Do you consider the recent monthly numbers a new trend, or simply a bump in the road tilting the advantage to the sellers? Is this going to last? I'll answer that in a question. Silvio, what's up, man? Appreciate you. Oh, Shaka Zulu's there too. The spells are working. I don't know where you're watching this on, if it's Facebook or YouTube, but just know I appreciate your comments, and I'm going to do my best to answer all the questions. So this month, Paul, your question is this a trend? Well, and again, I'm just using this hyper local market, right? And what you'll notice is this trend line, right? The red line, the closed sales, those numbers are fairly consistent, right? They're not exactly consistent, but they trade within a more narrow range than what what you see as it relates to the unsold inventory, right? But even that seems to have a fairly consistent pattern. But no, I don't consider this to be a trend, despite the fact that we've got December and January, and January and February. I would need to see this more consistently and with more volatility to really speak to it being a trend, right? So 2 months in a row is just 2 months in a row. 3 months in a row is a pattern. 6 months in a row is definitely a trend, and anything more than that obviously confirms that suspicion. But I'm not exactly in trend territory yet, and also the numbers are so tight that there's not much really. If anything, the market is returning to normal, period. Now, what I can add some color on, and if you've seen some of my other content, you've heard me talk about it in other places, but mortgage interest rates have dropped below 6%. And the more mortgage interest rates drop, the more, obviously, the more buyers get unlocked, that buying a home becomes a financial feasibility for them, right? And obviously, the more attractive they get, the more buyers get unlocked, right? But also sellers too. So if someone is in a home that they've outgrown or want to be out of, but they're locked in a 2% interest rate, they're not trading out of that 2% interest rate anytime soon, despite maybe that they could want to all, as much as humanly possible. But if it doesn't make financial sense, well, then it's stupid and they're probably not going to do it. But my suspicion, which you didn't ask, but I've said it before, what I expect that we're going to see in the near to medium term is mortgage interest rates improve. And part of that is, well, the Fed chair has nothing to do with mortgage interest rates. However, they do control fiscal policy. And Trump would not put somebody in place who wasn't prepared to do his bidding, at least at first. Because the reality is that the head of the Fed should be autonomous, should be independent, should be beyond reproach as it relates to anything political. But that's just not what I expect to happen near term in the infancy stages of his term, because he wants to make Trump happy. And what has Trump gone on the record and said? Well, he said he doesn't want real estate values to depreciate. He wants them to appreciate. And when a real estate developer who happens to be the leader of the free world, I suspect he's going to do whatever it takes in order to make that happen. Now, whether that makes solid financial economic sense into the future, I don't know. I'm not an economist. If you want my opinion, I think anything that resembles stimulus or anything that resembles kicking the can down the road is a fucking horrible idea for the future. But that being said, I don't know what type of rabbit they're going to pull out of their hat as it relates to the affordability crisis, other than they're going to do something. Or maybe they won't. I don't know. Yet to be determined. But I suspect that that's going to happen. So it would not surprise me if for at least the next year, we see an improvement in mortgage interest rates. And with that, more sellers get unlocked, more buyers get unlocked. There's more action in the market. And that is going to be what it is, depending on what market you're shopping in. I need to take a pull of this coffee. I get dry mouth. Okay. So, okay, I'm just trying to look at. So on my live stream, I can see your comments, but then there's a different version of it on a different screen. So I was getting confused there. Turns out they're the same thing. I just didn't want to miss anybody. What can we expect in Florida, right? Well, what I'm experiencing and witnessing firsthand, and it's the only data that I can speak to accurately, is I know that the market conditions have changed significantly on the buy side from relocation buyers, right? So relocation buyers are moving to Florida much more than they did last year. And are they moving at the pace of the frenzy? No, because mortgage rates aren't at 2%. But is it fair to guesstimate that we'll see mortgage interest rates in the mid fours or mid fives? I think that is highly likely. And if that's what happens, then you can expect that there's going to be a frenzy as it relates to real estate in Florida. Why? Because of the political landscape in other blue states. There's a lot of folks that may be diehard New Yorkers that will never move, but there's also an equal and opposite component of that, which were diehard New Yorkers who can't wait to get the fuck out. Same thing with California, same thing with Virginia. Between the taxes and the politics, it is simply unsustainable for some people. And Florida and Texas and other places are going to be the beneficiary of that, right? So demand, in my opinion, is based on my own results, is definitely on the uptick. Supply is still very distorted in many places, depending on which market that you're in. But also, now the other wild card here is we got DeSantis, right? And he is pushing aggressively forward with, I don't remember how many bills at this point. I did a video on it in the past. You can find it on my YouTube channel. But DeSantis is looking to decrease the burden of property tax for Florida homeowners, right? And so, will that bill get passed? I don't know yet to be determined. I know there's several bills that are working their way through the system. Having several of them is not good for the likelihood of it actually passing, because too many choices mean not one good solution. We just need one good solution, not 10 different options. But assuming that that happens, which is a big assumption, but if it's factually true that there is a decrease in Florida resident property tax, well, then you can bet your sweet bippy that there's going to be a massive uptick in terms of demand from other places. And that's just what it is. The combination of the two, the easing of credit, or whatever new financial stimulus package that they come up with to increase home ownership, which I'm expecting will happen. There's going to be I think the next boom in real estate in our market is similar, if not bigger, than the last, period. That's my belief. So make hay while the sun is shining. The good news here is, for anybody who's thinking about buying today in the sweet spot before those things have happened, is that you're still in the sweet spot. You still have the leverage. You're still able to go out there and negotiate massive discounts based on the financial pain that sellers are experiencing in real time. And I got a phone call coming in from California as we speak. And no, I'm not going to take it. I'll call you back. Probably a YouTube buyer who wants me to help solve their lifestyle issue. Because that's the only people who call me from California, unless it's spam. And it might have been spam. I don't know. All right. So I hope that answered your question. That's where we're at. Let's go back to, I'm still sharing the screen. But we spent a lot of time talking about a lot of different things. Let's go more macro. And I'm probably going to stay macro, with the exception of somebody asked me, where is it? Can I do 33165? Sure. I think so. All right. 3 3 3 1 6 5. Oh, gotta get rid of 33473. 3 3. This is the fun of a live stream. You get to play with your computer. Oh, another person calling. Sorry, I can't talk to you now. Sorry. All right. So show chart. Oh, you know what? I have food. This might be. Actually, I do have to take this phone call. Please hold. I'm calling the security gate to let in. Hey, it's Chris Igoe. You can let in Instacart. Thank you. Why I have to tell them the same thing over and over again and expect a different result, which is insanity, I don't know, but I do. All right, so we're now looking at 33165. We'll start with for sale versus sold. And whoever asked for that, you can see the distortion between the number of homes for sale versus sold. And what you'll notice, again, this is a small market, right? There's only 79 homes for sale, but that's an 11% decrease from January, right? There's an increase of 16 versus 15. So although 7% may look big, it's an increase of 1. And then from there, Penn did the same thing, 24 versus 23, up 4.3%. It is what it is, right? And then from there, let's look at average price versus sold. I'm not going to go into the reflective look in January and December because it's going to take too long. And also, I know you guys can see it yourself. But February, the month of February versus the month of January, decrease in average active price by 2%, 948 versus 968. Average sold price upticked almost 10%, 798 versus 729. Great news if you're thinking about selling. Well, let's look at month supply of inventory. And honestly, in this short of a time frame, it's not really great news for either side because these numbers aren't very distorted, or is not as distorted as they could be. If we were to look at the condo markets, I could promise you that the month supply of inventory is years. The month supply or the distortion between what's active and what's sold is massive. The condo market is a complete fucking disaster everywhere. And so if you're thinking about buying a condo, basically anywhere, there are definitely things that you must be mindful of, specifically assessments, specifically structural integrity studies, and a bunch of other things. But you know, there are some lenders that will not loan to certain condos based on lots of different risks inherent within those condos, right? And if you're not on that list, as far as lendability is concerned, you're probably fucked as a condo owner, or at least at an extreme disadvantage as it relates to buyers that are available that are willing to take on the risk that's inherent in those buildings that have these financial risks involved. But that being said, we're still talking about 33165 month supply of inventory, down tick 9%, 4.9 months versus 5.4. Look, if you're shopping basically anywhere and you need to move and you're a buyer, you can negotiate massive discounts. Period. End of story. Now, I'll throw in there as an asterisk, I will know instantly if you were looking to buy in 33165 and you call and we're working together and you show me a home that you just found that just hit the market, I will know in about 10 seconds whether it's priced the right way and whether there's a competitive market that will be forming instantly, right? So I knew when I listed the home in Canyon Trails, it didn't matter what the numbers were because the numbers are distorted. I knew we were going to have multiple offers which bid the price higher immediately. And that was based on the number of showings that came in on day one and day two and the contracts that we started receiving. So I'll be able to sniff out real quick whether you're looking at a competitive situation or whether you're looking at somebody who's smoking crack in terms of value. But that's what the month supply of inventory is. And holy crap, I've already been going for 42 minutes. There's a lot of content featuring younger buyers who regret buying, plus lots of layoffs, AI uncertainty, etc. Yeah, Shaka Zulu, man, the buyer's remorse is real. And if you're financially challenged in any way, the pain and the fear and the uncertainty that's real right now is terrible, right? So if you're not ready to buy a house, don't buy it, right? If it's not the right time for you in any way, shape, or form, don't do it. Don't do anything that is not right for you and your financial circumstances and your lifestyle and your family if you have one, period. So there is no best time to buy or sell. It's only when it's right for you. And look, I can't speak to what other people do. I don't know. But what I can tell you is when I meet with a client and in the initial onboarding process, they will let me know their financial reality. If at any point they start to, during the shopping process, get outside of their financial reality, I'm the first one to remind them of their financial reality, because the last thing I want is somebody to have buyer's remorse or make a bad decision based on emotion. I don't have any. I don't. And that's not exactly true, but I don't as it relates to this. The last thing I want is somebody to overpay or do something that is not in their best interest. So I don't know whether you believe me or not. I've never once talked anybody into doing anything as it relates to buying or selling real estate. In instances, I talk people out of doing things that they've initially told me is not in their best interest. And if that changes, I make them build the case for me as to why it makes sense. Because I feel a fiduciary responsibility to protect people from themselves when emotion starts to get involved. And so I would expect that other professionals do that. I just know they don't. And certainly the non-professionals that are part of the subset of the agents that exist, well, good luck. because not everybody does. I often make the mistake that people think and act the way I do. And I've come to learn that people almost never think and act the way I do. So it is always a mistake for me to think that people do anything the same way I do, because nobody does. And that's good, because if everybody was like me, this world would be very different and probably not great. Nonetheless, that was 33163. Let's go into, I'm getting short on time, so I'm going to do Boca Raton, Delray Beach, and probably that's it for today, but I can jump on some other time and bring you up to speed in real time. All right, so we did city. Let's do Boca Raton. Single family homes. And we'll start with whatever it comes up with. Starts with month supply of inventory, right? So month supply of inventory on the uptick consistently, which is a pattern which you should be aware of. Not necessarily a trend just quite yet, definitely a pattern. January, 4.5 months versus 3.9 in December, uptick of 15 and change percent. And then in February, 5.3 versus 4.5, up almost 18%. That's a big change, right? If you're thinking about selling in Boca Raton, which again, this is a macro number, there's massive price distortion and market distortion as it relates to everything I'm about to share, because there are areas of Boca that trade very differently than other areas of Boca. West Boca is completely different than Central Boca, which is completely different than East Boca, period. And anything waterfront or coastal is completely different than anything else that isn't, right? And so Boca is an extremely affluent area and great schools and great place to live. And I used to live there before we moved up here, but I don't have to, so don't take my word for it. Let's look at the numbers. The average active price in February was 3.462 versus January, which is 3.502, down 1.1%. Look at the massive distortion between sold and active, which again, this has to be hyper granular to make any sense. It just illustrates the point that the macro number is distorted. But if this were factually true across the board everywhere, well, then it would tell me, and by the way, it's not, but if it were, it would tell me that the difference between the seller's opinion of value and what a buyer would pay is insanely off, because the average sold price was 1.845, which again, up 3.1% since January. But, it's just a massive delta, right? So just know this is not universally true throughout Boca. This is Boca macro overall. But that's what it is. Let's look at the for sale versus sold, so you get a sense of the numbers that are involved as it relates to single family homes in Boca Raton. And what you see, we're talking about a sample size of roughly 600 and change, right? So 684 were on the market in February versus January, 655, an increase of 4.4%. But the sold was 129, down 1.5%. The pended was up 1% and change, 187 versus 185. And you can see that distortion of supply and demand versus the light green and dark green bar graph, and also the trend line that's fairly consistent, right? So it is a stable market. There's just massive distortion in pricing in basically all markets. All right, so I just did that. Month supply of inventory on the uptick. Month supply of inventory up 15%, January versus December, and February versus January up another almost 18%, 5.3 months versus 4.5. If you're thinking about selling, what I will tell everybody is, and it's not anything new, right? This is not because I'm so smart. It's just because I know what the reality of it is. If there is some sort of Shaka Zulu, you talked about the financial pain, you talked about the buyer's remorse. I've talked about the affordability crisis. I know there are lots of fake rich people that live in Boca Raton. I know there are lots of fake rich people that live in my market. I know that fake rich is a very real thing for a lot of people in Florida. What does that mean? It means that they make a lot of money, right? You could have single income earners or joint income earners or combined earnings where you have people making $1 million, 2 million, 5 million, doesn't matter, name the number. They make a shit ton of income, but they're buried in debt for whatever reason. They want to keep up with the Joneses. They need the latest boat, yacht, plane, whatever, car, multiple cars, watches, women, lifestyle, whatever. It doesn't matter. If you make $1 million a year and you spend 1.1, you're not rich. You're in the hole $100,000. And unfortunately, there's a lot of people that live that way, which I'm not judging at all. It is what it is. Everybody live whatever life they want. I don't care. Doesn't hurt me at all. But I share that to say, as economic conditions worsen and financial conditions worsen, well, then you can only play the keep up with the Jones game for so long before you have a personal financial black swan event, right? And if that's happening to that type of person in one instance, it's likely happening to many people within that market the exact same way. Now, do I have a data study on what those numbers are? No, I don't. But do I know it happens? Yes. When all those people feel the same pain at the same time, the same way, and they all look to unlock the metric shit ton of equity that they think they have, what they're going to unfortunately discover is that equity is not real until it's realized. So the funny money that exists as it relates to equity that people think they have, that's going to bail them out when the shit hits the fan. If the shit hits the fan for everybody the same way at the same time, well, then the equity goes bye-bye real quick, because you find yourself with the flood of inventory, which now you're playing the catch a falling knife game as it relates to selling. And if you think you might be in that position, you absolutely must get in front of it as quickly as possible, because when the trend is not your friend, you are fucked financially. And the equity you thought you had does not exist. And it's not my fault. It's not anybody else's fault. It's just the market reality of what it is. And the market is always right. Doesn't care about what I think, doesn't care about what you think, doesn't care about what anybody thinks, period. It's just what the market is, whatever the given moment is, given circumstances are. All right, so that is Boca Raton. And right now, my groceries, which there are frozen items in, is definitely melting at my doorstep, which is why I'm limiting this to just Delray Beach. And then I'll jump. But important for most of the people that I work with, because they're primarily in Boca Raton, Delray Beach, or Boynton Beach, or Wellington, or surrounding markets, or Parkland, or Coral Springs, or Fort Lauderdale, or whatever, or lots of different places. I just don't have the time today. Where in God's name is, the alphabet is instructive. Delray Beach. Okay, so here we go. Once again, single family homes, macro number. And again, this can get far more granular and will be distorted because it's a macro number. But we're talking about month supply of inventory because that's where I started. Month supply of inventory. Big uptick January versus December, 33.5% uptick, 5.2 months versus 3.9. And downtick of 9%, 4.9 months versus 5.4. So basically a swapola, essentially, in terms of month supply of inventory. Not exactly. I know how to add, trust me. But it's 4.9 months, right? Average versus sold prices. Whoa, look at this distortion, right? Nonetheless, average active price in January, 2.425 million versus 2.507, down 3%. And again, this is the active average price of a property on the market versus what's sold. Average sold price, 1953 versus 1.414, an uptick of 38% in terms of average sold price. You're feeling pretty good if you're a home seller in January or a homeowner in January, and then a little bit less, although the number's still higher. Average active price 2.552 versus 2.434 February versus January, and then average sold price 2,000,001 versus 2,025,000, down 1.25 or 1.2%, right? again, it is what it is. Delray's pricey. And so, again, there are, and also this is not including condos. So there are opportunities for a buyer at every price point within Delray, Boca, and Boynton Beach. These numbers don't speak to that because unless I get hyper granular in terms of where you're looking to buy, it's really hard to do outside of the zip code, which I've already covered too, and I don't have time to do more. All right, but let's look at what those numbers look like so we know what the sample size is we're talking about. And you can see from the bar graph, unsold versus sold, the trend line remaining consistent. But January versus December, the total number of sample size we're talking about is right around 400, 435 versus 434. Down tick of sold, 25%. Pendant, down 20%. We see the inverse and opposite to a degree in terms of February versus January. Ballpark figure, same number in terms of for sale, but 89 closed versus 73, uptick of 22%, 112 pendant versus 107, an uptick of almost 5%. Again, we're still talking only about 400 homes. But again, this is only single family homes. And the markets that exist within Delray are very different as it relates to intensity of demand and price and supply and a million other things. So I hope you found this content valuable. I really do have to run. Let's see here. What part of Florida do you sell homes in? Well, Randy, I'll put it this way. If I don't service the market that you are looking to do whatever it is that you're looking for, whether it's Florida or anywhere else in the country, I am networked with, and this is no bullshit, I know, like, and trust real estate professionals throughout the country that I would send my parents to, my sister to, because I know they know how to negotiate and advocate for you the right way, irrespective of buying or selling. So if I don't service the market you're in, I will absolutely connect you with somebody who specializes in those markets. But I'm primarily in Palm Beach County and Broward County. And again, that depends on price point and motivation and lots of other things. So just know I got your back no matter what, period. Shaka Zulu, so true. Yeah, 100%. People don't necessarily, unfortunately, people think that the good times are going to roll forever. And I've learned that's not true, right? So I don't judge or blame anybody for being in any circumstance they find themselves in, because life changes and things happen and it's nobody's fault. It's just the way life goes. But if you're not prudent and disciplined and financially responsible, well, then you're probably going to be in some type of risk at some point, no matter what. I just don't know, I just don't know when when it's your turn, but you're going to get it. It's just the way the numbers go. So that's it. I've been on for an hour. Thank you for watching. I appreciate your time. Like, subscribe, share it with a friend. And why could potentially call Jing, if you didn't catch that, start at the beginning because I went over for about a half hour. But that being said, I appreciate all of you. I love you. And God bless. Good luck. God bless America. And now I got to go get my groceries, which are waiting for me.